Good evening, everyone, and welcome to FXDD, how to identify momentum with indicators. My name is Nenad, and now we will see how you can use MACD to identify trend and momentum. Before I start, have in mind that Forex trading carries a high level of risk. There is no rule for all investors. Please educate yourself so there is a associated Forex market before you start trading live. Everything you see and hear from me is my personal opinion only. And at these web addresses, you can sign up for more live educational and trading webinars. Now, let's start with the webinar. First of all, what is an indicator? An indicator is something that tells us something. Forex indicators should be a mirror of price action. But because we have a lagging and leading indicators, we need to distinguish between two of those. Leading indicators are used for momentum. Lagging indicators are used to show us the trend. An indicator is a mathematical calculation based on the price. And also, some indicators are actually coupled with other indicators in order to produce statistics for conditions in the market, to measure current conditions in the market, and also to forecast also further financial trends. The main purpose of using indicators is, first, the main purpose is to find a trend and to confirm trend and entry. But we also use indicators to measure momentum. If we do multiple time frame analysis, like let's say analyzing 3 consecutive time frames, starting from the top, drilling to the bottom, then we use the highest time frame for trend, the middle time frame for momentum, and the lowest time frame for an entry. Remember this, guys. Once more, if we do a drill down, top-down analysis, the highest time frame, let's say 4 hour, is used for trend. 1 hour is used for momentum. 15-minute time frame is used for entry. So indicators can do that instead of, let's say, us. We don't need to stare at the screen judging what the trend is if we have a proven set of indicators that might actually show us correct trend and momentum. But also indicators can help us with managing the trade, give us more confidence in a trade, giving us a confluence that we use for further trading conclusions. For example, leading indicators are called oscillators, while lagging indicators are called momentum indicators. So we need to distinguish between two of those. Oscillators are CCI, that is also an entry indicator. RSI, stochastic, also an entry indicator. Lagging indicators are momentum indicators. MACD, moving averages, momentum, Bollinger Bands, on-balance volume. There are dozens of different indicators that Forex traders use each day. However, we need to distinguish between some of these indicators, why we are using them, and for what purpose. Moving averages are usually dynamic support and resistance levels. And when we use moving averages, we usually take a look at the price that is slightly lagging. It doesn't mean that the price is lagging heavily, but moving averages are all lag in nature. And because of that, we use them not for entries, but rather to show us dynamic support and resistance levels. I know personally that a lot of traders use moving averages crossovers. It's not good, guys. In my opinion, all of these moving average crossovers are extremely bad in non-trending conditions. It means that you will have a lot of signals that are false. And I never use cross of moving averages as confirmation. It can be a confirmation. For example, on my MACD platform, on my Camarilla MACD, I will show you that right away. on my Camarilla MACD, I have some of those. For example, here. So once the price hits Bollinger Bands, closes inside, and moving averages cross, I have a signal. See this. See this. See this. So basically, moving average crossovers work in conjunction with other indicators. But alone, usually you will fail. You won't have success in trading only crossovers. I see the comment from Egori. Hi, Nenad. I have tried to apply most desirable analysis from price action itself. Previously, I used MACD, Bollinger, RSI, Avramis River, now Fibonacci retracement pivot waves. Even I tried to recognize support resistance via Ichimoku. Yes, Egori, all of these, what you are telling me, I have tried myself. And not just this, what you wrote there in the chat. I actually tried 50 times of 50 times more indicators that you wrote. I mean, maybe even more. I have personally seen and tested more than 1,500 indicators. And in my database, I have 5,000 different indicators. And you know how much I use, how many of them I use. This is what I use. Bollinger Bands, higher time frame, Bollinger Bands, MACD, couple of moving averages. On my other template here, I use set of moving averages and one indicator that is custom-made indicator. See this, for 1, 2, 3s. And ATR, this is it. Out of 5,000 indicators, I use this. And MACD for 4-hour trading still serves me well. It has withstood a test of time, and so far it's been really one of the most proven indicators to work in Forex and financial markets. We also, now I will show you how you can do it by MACD. This is the purpose of the webinar. So I'm going to show you how you can measure the trend with MACD. But have in mind that this is one of the ways how we do it. I personally prefer this way. I've been trading like that since 2011, 12. And yeah, I really recommend a book from William Blow. It's called Momentum Direction Divergence, where he also explains MACD indicator in a little bit more depth. So we have different tools. I prefer exponential EMAs over SMAs because they are smoother. But we also have smoothed SMAs, linear regress moving average or LMA, Bollinger Bands, and we also have static, like, for example, Camarilla pivot points. All of this should be combined into a trading method that is effective, right? So you don't need to have all of them. Few of them is enough. One leading indicator, one lagging indicator, one pivot point or two pivot points like ATR. ATR is the best for intraday trading, and that's it. Now, indicators, usually those leading indicators, I'm talking about leading indicators. MACD is lagging, it's not leading. Leading indicators are RSI, CCI, all those indicators that follow the price real time. They are strongest during periods of sideways and non-trending periods. It means that you will see all of these movements clearly in markets. When markets is trending, it's easy. Then you need to use whatever indicator you want. You will win usually. I mean, not literally, but when markets are trending, you will win. The hardest part is to trade ranging markets. Ranging markets is the hardest to apply. Correct assessment of indicators should be that they work the strongest during periods of sideways. Guys, on my Camarilla MACD system, here, signals are only given when trend is respected. When there is no trend, my indicators are flat. They don't show anything. So this is why I'm saying they should be the strongest in trending in ranging markets. They should not give you signals during ranging markets. They should stay flat. They should give you only signals during trending markets. But the problem with many systems is that there is a lot of indicators on the chart, and you will have many signals that are false. Indicators should be following the trend. Okay, this is very important. Following the trend. Trend is your friend, don't forget. During the trend, create many buy sell signals, not during the ranging market. Because guys, during the ranging market, you will lose. Believe me, I also lose from time to time when markets are ranging. Because I use my system, but sometimes, let's say, I decide to enter a trade based on, let's say, discretionary call. My system does not give me a trade, and I said, okay, I will do it myself based on my own assessment. Most of the time I'm correct, but there are times when I'm not correct. And this is because markets are ranging. You know what happens? I am okay with my entry. Usually it's always positive, but then I don't close. I don't close the price. I'm for trading low ranging markets. You need to be in front of your screen. If I'm sleeping and I don't put expert advisor on my account, from a winner, it can turn to a loser. Because, suddenly you have the range, and instead of taking profits, market breaks, hits your stop, or hits lower levels, misses your target loss. So have in mind that many buy or sell signals should only happen during trending markets, not ranging markets. Forget about trading ranging markets. Ranging markets, they can exist everywhere, any time frame, guys. What are ranging markets? When price moves like this is ranging market. Majority of leading indicators are oscillators, and oscillators are indicators that are plotted within a bounded range. Now, lagging indicators. Now I'm talking about lagging indicators such as MACD. They follow the trend. They're highly useful during trending periods. They produce fewer buy-sell signals, but you compensate with other indicators to give you buy-sell signals, those leading indicators. They capture the trend, and they're not so volatile as leading indicators. We will see examples here on my Camarilla MACD core template. I agree, you're correct. She's saying decreased indicators list is wise to do because there are bias if too much are applied. Yes. You know what happens when you have too many of indicators on your chart? Usually the strongest indicator will give you the signal. All other indicators will lag behind that strongest, let's say, indicator. You don't need to have all of them. One leading, one lagging pivot point, that's it. You might throw some moving averages as dynamic support and resistance levels. And that's it. You don't need Bollinger Bands. Bollinger Bands are one of the best. Believe me, guys, what I'm saying. One of the best indicators still in the Forex world, Bollinger Bands. They have withstood the test of time, and they are extremely useful in Forex market. ATR indicator, for example. ATR is the best for intraday trading. This is the ATR indicator. Here, it gives me the range, Euro-Yen, it gives me the range. This is projection high, this is projection low. Market usually stays within the boundaries on the range. And usually, you see, this is the range. 96 pips for the last 5 days. It indicates that market is volatile. Less than 60, market is low. So just use the information, but assess each signal from a trader's perspective. Now, we will use the examples on my personalized MACD cam, okay? And I will show you how you can capture both momentum and trend by doing multiple time frame analysis with MACD. But still, before I show you, Never forget, retracement is loss of momentum, and retracement is a part of the trend. So when you trade counter trend opportunities, let's say you want to trade counter trend opportunities. Let's say market is moving up, you want to short it. You are effectively trading a retracement. So for targets, you need to use Fibonacci ratios because this is still a part of the trend, but loss of momentum. So if you go counter the trend, you trade retracements, guys. You don't trade reversals. Reversals are only when trend changes. Reversals happen after retracements because retracements precede reversals. Okay. Now, I will also show you this on live chart if it's not clear with you. When MACD is above zero line, with both lines above zero line, we use double line MACD. So MACD with two lines. I'm not using standard MT4 indicator, only MACD with two lines. And when MACD is above zero line with both lines and solid histograms, we have uptrend. When MACD is below zero line with both lines and solid histograms, it's a downtrend. When MACD is above, okay, or below zero line but with thinning histograms, it's loss of momentum. MACD above zero line with thinning histograms and line crossed, retracement in uptrend. MACD below zero line with thinning histograms and lines crossed, retracement in downtrend. Now, this might sound confusing, but this will be very clear. Let's use this example. Euro yen here, see this. We have solid histograms here, but we also have a thinning line here. See this. So it means that here on 4-hour time frame, the trend is to the upside, but we are having a small retracement. If we drop to 1-hour time frame, okay, I don't see my MACD here because it's set to show only 4-hour. I will quickly open the chart. Let's say gold chart, for example. We made, actually, guys, just to let you know, we made 80 pips with trading gold today. You can follow this, my FX book account, FXDD account. This is live account. You can follow it on my FX book. I want to show traders how I trade and I want to show how I make profits. Okay, so here we go. Let me check quickly. Okay, we have candles. I will just add my indicator, our own indicator, ECS MACD here. Okay, here we go. So we will use these examples. So gold, starting from 4-hour time frame. You see, 4-hour time frame on gold is bullish because both lines are above zero line, but we have a loss of momentum. We have a retracement in a bullish trend. So see this. This is when trend is extremely strong. This is bullish trend. And when you see this, you move on to lower time frames to find an entry. When you see this, it means that you still can find entries on 4-hour time frame because 4-hour is in uptrend, but it has a retracement. Uptrend is because two lines are above zero line and there is a thinning line. So you see these thick lines means that there is retracement. Now the retracement has been done and we might move up from these levels again. We already made pips, but I'm just saying that we still can move up from these levels. So see this, guys. We have uptrend. This is a sign of uptrend. This is retracement, loss of momentum. Thick histograms. Thinning histograms here mean that there could be an entry very soon. For entries, you use leading indicators. This is a signal from a lagging indicator such as MACD that trend exists, momentum now is there is a momentum loss on a 4-hour time frame of uptrend, so price is retracing. Yours is to find an up move. Yours is to find entry to go long. You don't short, you go long when you see this. Just giving you examples, different examples. Dollar CAD, let's use 1 hour time frame. Okay, what do we have here on dollar CAD? Market is in uptrend, strong uptrend. See this, blue histograms, both lines above zero line. Let's drop down to 15 minutes. We go lower, we drill down. We have loss of momentum, guys. See this, both lines are above zero line, but we see thinning histogram. So this is a loss of momentum. We go down. We need to find something that we saw with gold. Both lines above zero line, a red histogram, thinning histogram. That could be an entry soon. And this is it. You see? Now, when market shows thinning histograms, you should be able to find an entry on 5-minute time frame. So this is it, guys. You drill down to 3 different time frames, search for trend, momentum, and entry. Edgar is asking, MACD cam displays automatically the high and low, and additionally I use Fibonacci retracement. You can use that, whatever your entry is. I'm just showing you now how to define trend and momentum, how to drill down to your entry time frame. For confirmation of entries, you need to use something else. This is not the part of this webinar. Maybe in some future webinars, I will explain how I use my Camarilla MACD system. That can be one of my webinars. But let's say that at this point, guys, just use this, what I'm explaining you. Green and white lines are crossing and it's confirming retracing. Yes. So again, 1 hour is bullish. You have both lines above zero line. You have thick blue histograms. When you see this, it doesn't matter which pair. You go lower time frame. I don't use 30 minutes. I go directly from 1 hour to 15 minutes. So we go to 15 minutes. See this. Now you have both lines above zero line indicating uptrend, but these thinning lines are saying, okay, drop down 1 more time frame, find an entry, because this is loss of momentum. You see, price is retracing. It's reflected on MACD. Price is retracing. That is why you see these thinning histograms. And then 5 minute, once it starts displaying thinning histograms like here, okay, here thinning, then this is the time for you to find an entry, because it means that there is enough of retracement, and now 5 minute could turn to the upside. This is how you identify trend and momentum. I hope that this is clear, Eggery. And I always use 3 different time frames. I never use more than that. So if I don't see this on 3 time frames, I don't trade. And I usually go with 4 hour, 1 hour, 15 minute, or 1 hour, 15 minute, 5 minutes. Those are 3 consecutive time frames that I use to spot trend, momentum, and entry. Is this clear? If this is clear, then guys, again, this webinar is being recorded. It will be uploaded to FXDD YouTube channel. In one of my next webinars, I will actually show you how I use this in conjunction with my Camarilla MACD core. So for now, you might use this knowledge for your own system or for your own trading method. But have in mind that still, if you use this, what I was explaining, you need to have actually a leading indicator that will confirm an entry. So see this, MACD is dropping on 5 minutes. We see that it's still this. If it starts making these histograms while both lines are still above zero line, then use a leading indicator to confirm an entry. I don't know, stochastic, whatever, guys. But this is how you capture trend, momentum, and entry time frame. I hope that you enjoyed. I know that these things, you will not find this on internet, I guess, because this is something that I've been using for more than 8 years, and I have found this myself by watching how the double line MACD behaves. Henrik is saying, thanks, very educational. Yeah, you're most welcome. So again, guys, yeah, this is it. You might, of course, always inquire whatever is not clear. I'm here to reply. If you still need some explanation, whatever, just leave a comment below the video later on YouTube, and yes, I will reply. I hope that you enjoyed. I wish you a safe trading day. We have NFP tomorrow. Be very careful. And yeah, talk to you soon. Cheers, guys. Trade safe.